Eric Mwather with Mwather.com. I want to take a look at a stock you purchased yesterday, which is now there's nothing wrong with the stock. What I want to discuss here is the issue of timing. And why is that? Because if you take a look at the current stock for AMBA, you'll see that on the weekly, for example, the stock is been something like this. And your purchase came somewhere around here. Now, that's where I would like us to discuss the timing issue. Because if we go back and take a look at the monthly, you'll see that the monthly was obviously, on hindsight, giving you a better entry point. And we'll see that the weekly was also giving you a better entry point. So really, to summarize this is what I would like us to discuss, and we'll take a look at the chart example for AMBA. The thing I would like us to look at is always to be mindful of where we are buying our securities. And I would really go and put a lot of emphasis on this in terms of timing, especially if you are looking to swing trade the position. So if you're looking for a swing trade, and we're talking about 3 months, that would be my rough estimate, to 6 months to maybe 9 months. Now, I know most people will find this to be what long-term investing. I don't think it is, because if you go take a look at any stock that had a nice run, it's going to take a couple weeks, a couple months. And so whether you can fight that trend, I've noticed more and more we are becoming short-term traders. And so for some reason, the market is just, people don't want to trade long-term. And long-term to me, surprising, is anywhere from 3 months, which is really the sweet spot, to 6 months. Nobody wants to do that anymore. Why that is the case, I don't know. But anyway, so I would like us to consider the monthly view, because the monthly view, for example, if you see the monthly closing high recorded here, so let's say stock was trading down, came and recorded a monthly closing high. See whether I can change colors here, and had a 1 down month, right? And then we want to buy at the next breakout. And so the next breakout on the monthly chart is 1 month after this down month. So the next breakout should be a close above the previous monthly closing high. So we're talking about after you've recorded that close, your next buy point is obviously gonna be during this breakout. If we go take a look at, again, AMBA, from a timing perspective, this was the ideal entry point. That doesn't mean that you can't make an entry in a stock on the daily. But if you really want to look at this from a swing trade perspective, the reasoning here is you want to go back to the monthly. If you miss the monthly, your next bet is to time the stock on a weekly chart. And that's your best bet right there. So we'll take a look at AMBA chart to see what it looks like in terms of timing. All right, let's go to the chart. And so here's a daily chart for AMBA. Now there's nothing wrong with the stock itself in terms of the chart. Purchase was done somewhere here yesterday, or I think the day before. At any rate, you can see that on chart here, we have a couple of entry points based on this previous daily closing high. So there was an entry point there. There was another high there, and the stock settled down for a couple of days, broke out again. And recently, there was another entry based on a previous rest period. Now keep in mind, just to remind you, that whenever you're using the daily time frame is once you get a daily closing high like that, you have to insist on 2 days of rest on the daily. So you need at least 2 days of rest, and let me show you that so that we can have it from a graphic point of view. So you have 1 day, or the second day down, another day down, and then minimum you want the 4th day, and we call this day number 4 breakout. You want the 4th day minimum. It could be the 5th day or the 1,000,000th day, it doesn't matter, or the 10,000th day, but it should be at least after 2 days of rest that you can now break out. And why is that qualification important? It is important for one simple fact, that if you don't wait for this 2 days of rest, then you are buying the stock during a continuation run. So you need at least 2 days of rest for the stock itself to be considered having had a period of resting. So those 2 days are for rest period, and once you get that rest period on the daily, it should be 2 days of rest. Then the stock can begin moving again for you. Otherwise, if it's gonna be on the 3rd day of the breakout, then it is a continuation of the previous run. I hope that makes sense. So on this daily chart, you don't see a lot of reason, in my opinion, if I'm to be honest with you, to purchase the stock there, because you missed a couple of ideal entry points, and you're always looking for that 5%. So once you see a breakout like this one, and once you set yourself an alert, for example here, now what you're looking to do is own the stock during a 5% window above the previous price high. So you got a 5% or so window, which is roughly, you can buy it at 6% if you have to, 7% above the breakout zone. But in an ideal situation, you want to be looking for this 5% margin or range after the breakout. This is considered a logical place to go along. Can you buy the stock up 10%, for example? Sure. And I'll tell you why. Let's assume it's a great moving stock. For example, let's assume that this, for the sake of argument here, that this was the breakout here. Now that was at a price of $32. Stock is trading at 72. In theory, let's just say you bought the stock 10% above this range. So instead of 5%, you bought the stock, let's call it somewhere here. Now if you held on and never sold, you still made money. So what I'm saying is that 5% window is just a guidance. It is not written in stone. It should not force you or limit you to do one thing or the other. It's just a guidance. Otherwise, you can always buy it above or even before the breakout if you have conviction that the stock is going to move higher. Now, on this chart, I want to show you a couple of things. I wasn't supposed to talk about this when I was preparing the video, but you can see that the ideal movement of the stock comes from this low point on the price, which is this RSI movement. And as you know, we always try and figure out where the stock started a good move and we extend that line. And you can see what I'm getting at. Ever since then, the stock has come to this level and given investors nice entry points. Again, uniform activity on the line and back above it, nice entry point, which also happens to be around the 50-day moving average. We have another entry here, which was this period, and another period here, which was this lows. And you see why I personally have a little bit of a problem buying the stock here. You missed the breakouts on the daily, you missed the breakouts also on the weekly and the monthly, of course. And also you see that there were other periods when the stock was giving you nice places to go long after it gave us clear rebound opportunities. So buying it here, in my opinion, is a little bit of a problem, unless, and of course,
At that point, you do need to have that 5% stop loss, maximum 8% stop loss if you're buying it at such lofty prices. Now, the purpose of this video was actually to take a look at the entry points. Now we're going to take a look just at the most recent weekly breakout, which was here at about maybe 62. Okay, and your window was 5% above that range. So once you calculate what this previous weekly closing high was, you set an alert. Once that alert is triggered, then you have a 5% window to own the stock. Anywhere around there is okay. So to me, the most recent ideal entry point was here, because we haven't seen any rest period. On the weekly chart, and I need to point out this, on the weekly chart, you also need 2 weeks of rest, just like the daily. So 2 weeks of rest minimum. And at this point here, we see we had a couple of weeks, maybe 2 months or so of rest, but it is so 1, 2, 3, 4, 5, 6, 7, almost 7, 8 weeks of rest. So this is good enough rest period. And so buying it here, you are seeing you're buying it very extended from the most recent logical entry point on a weekly chart. And not all breakouts are successful. As you can see, there was a breakout here beginning of 2015, a breakout right there, but did not work very well because it went above and stalled for a little bit. Now, when that happens, what do you do? Number one, you get out of the trade because you're being stopped out at maximum 8%. Okay, so you would have not made any money here. Probably at worst, you should in theory lose maximum 8%. Or once you see that it is struggling to hold above the prior breakout level, then you can get out. At any rate, this breakout did not work out. So what do? You get out, and secondly, you figure out what the new weekly closing high is, which was again here at around 62, and you set an alert and forget about the stock. Next time, you're going to get an alert when the stock is moving, and that is when you go long here, and you know you have a 5% window in an ideal situation to go long. So that's the theory. Otherwise, on this chart, there were other entry points. For example, this was a nice high, and a subsequent breakout was very successful. This is what we are looking for. And also another rest period here for a couple of weeks before the next entry level. So I know this is oversimplification. Otherwise, we would be making videos, long videos going longer than anybody wants to sit down and watch one single video. So we have to summarize this by taking a look at the ideal entry points on the chart. And you can even see that going back, there was another entry point here, and on and on. So I want to answer one question that I'm sure is on somebody's mind, and it is, why did I put this as the breakout level? You don't have to. You can take the actual high, 52-week high, and draw a line like that, and you can see still that was successful. On hindsight, even the market came back and tested the same line here and here. And now we're just looking at price. We haven't even looked at the RSI or the MACDs. Here we're just looking at timing. Now, if we take a look at the monthly, which is the best, the monthly is the best by far, just because of the way it gives you earlier entry points. And for example, here we're just going to be looking at the timing going back. So one breakout there, successful breakout. There's another breakout here, which was successful. And I know this is oversimplification, but we're just looking at the ideal entry points that we missed, with an entry point right here. And now the kicker for me is the most recent ideal entry point was about 2 months ago during this breakout. Yes, it did not hold on to its gains for the month, but it closed above the prior monthly closing high, and that's the key. once it closed above this prior monthly closing high, the stock was a buy at the end of, or at the any time once it broke out above this. I would believe that is October 2014 monthly closing high. So once it breaks out, if it breaks out, you buy it on the hour, on the day, on the week it breaks out. You don't have to wait for the end of the month. But since we are looking at timing, the most recent ideal entry point on the monthly was during this breakout. And that breakout on hindsight was this close, which was successfully above the previous monthly closing high. And so that was your entry point at 55. If you had gone long at that entry point with a 5% window after the breakout above 55 or so, which is where we had set an alert, if I remember correctly, this was a buy for us once it moved above 55, because that was the previous monthly closing high. If you had gone long somewhere around here in the lower 50s, the stock now trading at 72 has given you a nice percentage gain. In fact, you can be looking to get out. So from a timing perspective, I have a problem with buying the stock here. Hope you can see why. Because we missed other ideal entry points. Now, just one more thing is you don't always have to use the absolute high on a 52-week basis like we can do here, which was a nice entry here. I personally like to use earlier entry points like this monthly closing low. There's 1 month of rest, and I would have considered this a buy at the point. Why? Because I can see that on the monthly, the RSI is moving back above 69.10. So that would have told me this is where I want to go long. And we can also see that at that particular point, the MACDs were close to fresh highs. So we're talking about this range or this entry. So let's get that in the right focus. So we're talking about this entry of this monthly closing high. You can see that the RSI was close to moving back above 69.10, and that particular point you can see that your MACDs were also close to moving above to all-time highs. So really this video, the purpose of this video was to talk about buying the stock here. From the timing perspective, based on the monthly, this is buying the stock when it is way removed from its ideal entry point about 2 months ago here. So if we can always try and find stocks that are breaking out on the monthly with a 5% window, breaking out on the monthly, this is where we can get the most momentum to our advantage. Eric Muade, good luck, peace, and blessings. Whoa!